Okay, so I hear this a lot and I see this a lot in the marketplace. There is massive amounts of skepticism about quant funds and bot trading, AI trading, algorithmic trading, whatever you want to call it. It's really all the same thing. So there's a lot of skepticism, and I think there's some validity to that, but I want to go through the skepticism. First and foremost, guys, you've got to realize that not all bots are Forex. A lot of people have a bad taste in their mouth because of Forex, the foreign exchange. So these are often martingale bots. These are often grid traded bots, and those have a very high level of risk. They do really, really well until they don't. And often you will see accounts that are getting blown, and you'll see a PAM account or whatever really suffer. I've had those in the past that obviously suffered and because of those strategies, because of martingale, because of grid trading. But people don't understand that there's a world outside of Forex. Forex is risky, unregulated brokers. It's not regulated in the United States. You know, you're going to be working overseas, but that is not the only option. Okay, we do things like futures that are fully regulated in the United States of America. U.S. broker, everything is above board, and it's just different. Okay, you're not going to use martingale. You're not going to use grid trading. So first and foremost, like, make sure that you're distinguishing, is this Forex or is this futures? Okay. Now you will see some institutional level Forex algorithms. We have a couple that are very, very different than your run-of-the-mill $5,000 bot. Very, very different, but you get the idea. So the other thing that you've got to keep in mind is people say, oh, I blew my account, or, you know, my account lost 90%. How does that happen? How does that happen? Seriously, how does that happen? Well, I like to ask people, well, was there a stop loss? Well, no. That's how that happened. Was there a daily loss limit? Well, no. Okay, that's how it happened. Were you taking more than one trade at a time? Yeah, dude, it took like 27 trades. Like, it had 27 open positions at one time. Oh my gosh. Was it held more than a day? Yeah, dude, we held these for like 3 weeks. First of all of that is, again, very much Forex, but all of that it's not necessary. You don't need to do that, okay? With our stuff, as an example, it's futures, so it's fully regulated. Stop loss on every trade. We have a daily loss limit. We only ever have one trade open at a time, and we don't hold anything past 5 p.m. So for us to blow an account, like truly blow an account, we would have to lose like, it's something like 40 days in a row. And that just never happens. Like, you can go back, like, the history of our stuff is like 6 years old. It's never happened. Okay. Very rarely do we even have a losing week, let alone a whole month plus. So there's a lot of misconceptions. Super risky. Risk is determined by you. Again, with a daily loss limit, you set what you want the loss limit to be. It's super, super crazy. You set it the stop loss. You know, so is it risky, or are you risky, or is the settings risky? You've got to keep that in mind. People are very uneducated when it comes to this world. Now, as far as algorithms go and AI goes, I see a lot of people getting fooled by the term AI. There's not a machine that is learning how to trade in some secret warehouse. Okay, there's not an intelligent thing that is like learning and like reading and like adapting. That is not true. If anyone ever tells you that they've got, well, we have this AI thing, it's really not what they mean. Now, algorithmic trading or quant trading, now that can be programmed, but it's programmed like this: if this, then that. That is the sequence. If this happens, then do that. As an example, if we break out of the previous day high or the previous day low, if this, then do that. Then look for the volume, look for the ADR, and then place a trade. It's all based on parameters. It's not learning. It's your mind putting in parameters into an algorithm. Okay? There's not some AI thing going around that is like learning and like doing stuff. Okay? At least not that we know of yet. It's very, very, very human-centered and human-focused. So be aware of that. But all of these major institutions are using algorithmic trading. It's like 73% of all hedge funds, ours including, are claiming to use quant funds and quant strategies. They're using algorithmic trading. Beyond that, it's like over 80% of all the trades placed in the market are from an algorithm. So if you're thinking this is too risky, this is too, well, almost every institution's doing this, almost every hedge fund's doing this, and the majority of trades are automated. Okay, so it's not risky. The majority of people are doing it. You're just not doing it, or you just don't have access to do it. Okay, so if you want to learn more about how we have kind of hacked this market, if you want to learn more about how we have developed quant strategies and algorithmic strategies that are absolutely crushing the market and have been for the 6 years, if you're interested in that, let us know. We can get you hooked up with somebody that can actually show you a walkthrough, a demo of the data, and you can make your own choice. Okay? Appreciate you guys. Let me know if I can do anything for you specifically.